Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Monday, March the 22nd, 2010. Well, a continuation of the trend in the first time frame to the upside. We have a candle with a higher high and a higher low. Having said that though, we have a small red body to this candle, and that certainly doesn't support the trend in the first time frame to the upside. It actually is warning of a potential change of trend. We can see that we have a small red body to this candle, and that's telling us that the sellers made some net and bearish progress on the day between the open and the close. The close is also below the previous close, which tells us that the sellers are keen, and the close is down towards the low, which tells us that the sellers closed the market in control, and they showed some commitment to this market on the trading day. We have a moderately large shadow on top of the body of this candle, which represents downside price rejection, and we know, just looking back here, that every time this market has traded up to around this 81 level, especially towards 81.4, there's been selling coming in, and that's what's happened once again. We have this region from 81.4 to 80.4. That's a very strong area of resistance, and all of these shadows on these candles represent selling coming in. It's downside price rejection by the bears, who are actually taking hold of this market every time the market trades up into there, and the bulls lose all of the strength when they're attempting to rally. The previous two candles were quite bullish candles and fairly large green bodies, which may have led us to consider that there may have been a strong attempt on this area, but certainly this attempt has failed with this small red-bodied candle. Having said that, though, the trend is still up. We still have a trend with a candle with a higher high and a higher low, which means that we have an uptrend. So we do need to consider that the trend may continue to the upside and still find resistance up around this 81.4 region. If the market does eventually break out of that 81.4 region, it will be a very strong move if it does, but we can't preempt this market. We need to react to the market if it does break out, but certainly there should be a lot of momentum behind the market if it does do that. To the downside, we have strong support down below, down here through 80 down to 79.5, and then certainly through this 78.94 region around 79 down to 77.5, we have the cloud or the Kumo, and that will act as an area of very strong support for this market as well. So now the market is still trading up above the cloud, so that's positive in overall terms. The market still has an overall positive bias, so that's good for the bulls. And the market is trading up above the Tenkan Sen and Kijun Sen, which means that the market is bullish in the medium-term time frame and small-term time frame. But we have the configuration of the Tenkan Sen and Kijun Sen not supporting that bullishness. We actually have the Tenkan Sen trading below the Kijun Sen, which is giving us a bearish indication. So we're getting some mixed signals here from our Ichimoku indicators. So not really a market that we would be trading with a lot of confidence at this point in time. So I think we need to wait and see how this market reacts to these very strong support areas and very strong resistance areas. It could take some time for this market to trade out of these zones, so I think we just need to be patient in this time frame that we're trading in.